What's happening, beautiful people? Very good morning, everyone, and welcome to the European trading session. We're 10 minutes into the European opening, and here's what you need to know today. Bank of Japan kept interest rates unchanged. European stocks seen lower after the Fed meeting last night. Oil loses momentum as demand worries re-emerge, and Bank of England will announce its interest rate decision today at 1400 hours GMT plus 3. How you guys doing? Let me know how you're doing. Type your questions. Let me know if you need any help, and I'll do my best to help. Before we move on, please remember to like, share, and subscribe everywhere you see my face. Okay, like, share, subscribe, and support us to deliver more great content. Here's what's happening in the markets today. Let's move on to the charts, guys, and see how the markets open. So, European stocks seen lower on Fed disappointment is the headline of the day. This article was released only 32 minutes ago. Last night, guys, for the ones of you that don't know, we had the Fed meeting, the FOMC projections. Yeah, we had a lot of announcements coming from US, and great volatility happened last night. Let's see how the markets performed overnight, and let's see how the markets opened today. So, European stock markets are seen opening lower today as investors react with disappointment to the US Federal Reserve decision not to add additional stimulus at its latest meeting. At 2:05 a.m. Eastern Time, the DAX futures contract in Germany traded 0.7% lower. CAC 40 futures in France dropped 0.6%, while the FTSE 100 futures in UK fell 1.2%. The Federal Reserve kept interest rates unchanged yesterday and signaled that interest rates would stay close to zero at least through 2023 to support the economy's ongoing recovery. However, in its first meeting since adopting a more tolerant stance on inflation, the U.S. Central Bank did not offer further specifics on the central bank's approach to monthly bond purchases, disappointing some investors hoping for further expansion. Right. Let's see what ING had to say about the meeting last night. Nonetheless, the Fed remains worried, suggesting that the pandemic will continue to weigh on economic activity, employment, and inflation in the near term and pose considerable risk to the economic outlook over the medium term. That's what analysts at ING wrote in a research note last night. Right. Moving on. Earlier today, the Bank of Japan kept its interest rate at negative 0.1% and left its asset purchases unchanged while stating that the economy has started to pick up. The focus now shifts to the Bank of England, which is expected to announce its latest policy decision today at 1400 hours GMT plus 3, which is Europe time. Okay, let's see what James Rossiter, an economist at TD Securities, had to say about it. Right, the Bank of England is not done. More quantitative easing is necessary, and this meeting does provide a bit of an opportunity to shift things in that direction. The big cliff coming is on the employment side. Right. Okay, very correct statement. So all eyes on the pound today, guys, at 1400 hours GMT plus 3. We're going to have the interest rate decision from the Bank of England, followed by a press conference. So if you like to trade the cable, guys, have a look at the cable today. A lot of volatility is expected. I'll show you the charts in a minute, what happened volatility-wise at the Fed interest rate decision and during the press conference last night. Right. Now, before we move on, guys, the trivia question of the day, like every day, let's have a look at the trivia question. Right, there we go. What is the impact of a zero interest rate on the economy? Does that help the economy? Does that not help the economy? Give me an answer, guys, and I will reveal the answer towards the end of the webcast. So once again, the question of the day is, what is the impact of a zero interest rate on the economy? This is the question of the day. Type your answers, be brave, and I will give you the right answer towards the end of this broadcast. Right, let's move on and see what is happening with oil, guys, which had an amazing rally yesterday in the last 2 days. Oil prices fell today, rebalancing after recent strong gains as producers in the Gulf of Mexico took steps to resume output in the wake of Hurricane Sally. I have fresh news regarding Hurricane Sally. I will share that with you in a second. Right now, additionally, the U.S. Energy Information Administration late Wednesday announced a draw of 4.389 million barrels for last week, a substantial figure, but the market had already moved on the 9.517 million barrel draw recorded by the American Petroleum Institute the day before. So the markets were already priced in. That's what it means. A panel of the Organization of Petroleum Exporting Countries and its allies, together known as OPEC Plus, meets today to review the market, but is not expected to announce any market-moving measures. Right, so they say now any information that slips through reporters, through people familiar with the matter from that meeting will definitely impact the oil price. Right, U.S. crude futures traded 1.5% lower at 39.55 a barrel, while the international benchmark Brent contract fell 1.3% to 41.67. Both benchmarks saw gains of close to 5% during the previous session. Really good rally for oil in the last 48 hours. Elsewhere, gold futures fell 1.2% to 1946 an ounce, while Euro USD traded 0.4% lower to 117.68. Right, this is what is happening with the markets. This is what happened last night. Let's have a look at the charts, guys, and see what is going on. Right, there you go. We're looking at the charts on a 1 hour chart. So every green or red candlestick that you see there represents 1 hour. Okay, this is the amazing rally that oil had in the last 48 hours, managing to push higher from the 37.50 mark. From the 37 mark, where it was pinned for over a week. Finally, we saw the long-awaited breakout last night. Now we see a bit of a pullback, obviously ahead of the OPEC Plus meeting. Let's see if the markets will stabilize, pushing further today towards the 41% mark. Why not the 42? As that's where the previous resistance level is. Looking at the RSI and the stochastic, we see the RSI still pointing upwards. It only fell down to the 50% mark, and usually that indicates a potential uptrend. Okay, and strong buy positions on the market. The stochastic is at its lows. If the stochastic will turn around, then point higher, then very likely we will see oil pushing towards the 41 mark today. Let's move on. Euro US dollar. The euro fell yesterday afternoon and last night during the Asian trading session. It only started a mild recovery a couple of hours ago, about 3 hours ago. Just towards the end of the Asian session, as it was getting closer to the European opening. It's currently trading at 117.76. Okay, again, if we look at the charts on a 1 hour chart, we can see oil trading at its support level or very close to its support level down there. There it is. It's exactly on the support level. It had a very interesting spike last night, which I'm sure it triggered some stop losses if traders got caught on the other side. Now, okay, usually in setups like this, we see the RSI and the stochastic at the oversold levels. We see the euro bouncing off its support level. So by now, I'm sure many experienced traders went in with long positions targeting this small recovery. If the recovery will continue, then most traders will probably take profits if they go with long positions around the 118.16 mark or somewhere in that region. Now, let's move on to the pound, guys. Now, the pound obviously is very shy today ahead of the Bank of England interest rate decision and Bank of England press conference, which will happen in only a few hours. Okay, now the pound dropped on the U.S. trading session last night, recovered a bit on the Asian trading session, but still it didn't have the power to at least correct to the previous level. Okay, as things stand right now, the pound is trading lower. It's trading at 129.50. and it created a lower high and a lower low. Let's see what will happen later on today. It all has to do with the messages that come from the Bank of England and with investor sentiment. Okay, remember, guys, investor sentiment weighs heavily on the price of the assets. Right, looking at the bottom of the chart, we see the RSI and the stochastic somewhere in between. Yeah, the RSI is trading at the 53% mark. We see the stochastic trading at 47%. Okay, so there's a lot of uncertainty in the markets. USD JPY, which did really well on the Asian trading session, started losing momentum, heading downwards with the RSI and the stochastic heading towards the oversold levels. Okay, let's see what will happen with the dollar today. The Aussie dollar dropped drastically last night as the US dollar was strengthening following the interest rate decision and the FOMC projections. Right, USD Canadian, the same. Yeah, the US dollar, there is the rally that the US dollar had yesterday since the US market opening. Okay, now it's starting a correction. Let's see how it goes. Let's see how it goes. Okay, currently it's trading at its resistance levels, turning around towards support. So what you can do if you like using support resistance levels, guys, you can break it down like this. Yeah, in 2 or 3 areas. And they will give you the most probable direction for the US dollar. Okay, looking at the RSI and the stochastic, we see both of them in the overbought section. So most probably the USD versus the Canadian will push lower today. Okay, targeting the 131.97 mark. Okay, now if it will go higher, let's move to a 4-hour chart. Okay, now if the USD will find the strength to push even higher today, then very likely traders will target the level at 133.41. Okay, this is how it works. Now, looking at the charts, okay, the most probable direction is a small pullback. Okay, as things stand right now. But remember, guys, the financial markets are unpredictable, so anything could happen any moment. The S&P 500 and the Dow Jones closed the American trading session yesterday in red, suffering more losses, adding more losses to their downtrend. We see the RSI and the stochastic again pointing downwards. So let's see what will happen today. Will the US dollar find the strength to push even higher, lowering the American indices? Now, why did the American indices lose momentum yesterday? Is that the Federal Reserve did not really manage to offer any more details on the fiscal stimulus that the American companies are waiting to reboost the economy. They only spoke about the interest rate, and when it came to stimulus measures, Jerome Powell was dovish, let's say, but he didn't manage to pinpoint anything, and the markets felt that. Right, let's move on. Let's have a look at the US dollar index. Again, we're looking at it on a 1-hour chart. You can see the fantastic rally that it had. And now, again, just like USD Canadian, yeah, is heading lower with the RSI and the stochastic pointing towards the downside. Okay, short-term exits very likely will be targeted by traders with exits around the 93.17 mark if the USD index will continue the correction. Alternatively, if we're looking at it on a 4-hour chart, wow, we can see the dollar index not being able to break the 93.8, 93.7 mark since July, end of July, somewhere there. So one of the two things will happen in situations like this. Either we're going to witness a breakout in the near future with the US dollar index pushing higher towards the 95, 96 mark, or it will continue the range, heading lower towards the 95, 95.2, 95.5 level. Okay, so we are currently looking at a ranging market. If you remember, we had this question in the trivia a couple of days ago. Okay, what are the 3 types of trends? that the markets can do. So the ranging market was one of them. Yeah. So this is how a ranging market looks like. Yeah. When an asset literally ranges up and down between certain levels for a long period of time. Okay. This is what a ranging market is. Okay. So we see the US dollar index starting the correction. Let's see if that will last. Okay. That's how it goes. Not very difficult, guys, is it? Right now, quick look at gold. Gold was pushed lower last night. Okay, gold is not managing to create an equal height high or a higher high to give us the confidence for long positions on gold. Again, retargeting the $2,000 mark. Okay, we see a positive opening on gold today. Again, gold is after the drop last night. Gold is trading close to its support levels. So with the RSI and the stochastic pointing upwards, a tiny correction would make a bit of sense on the gold futures. Right, Brent oil futures, again, the charts are almost identical to the crude oil futures. After an excellent 48-hour rally, crude oil is pulling back a bit ahead of the OPEC Plus meeting. Okay, more details in the hours to come. I will definitely have more details at the US opening this afternoon. Bitcoin, guys, your favorite, started the correction. See, this is what I was talking about. Okay, after a downtrend, you're going to see the markets going sideways for a bit of time, and most of the cases they will turn into an uptrend. Yeah, pushing towards their initial levels, their initial values. Okay, we see Bitcoin very shy this morning, trading at 10,899, just $1 short, just 40 cents short of the 10,900 mark. As long as Bitcoin is in an uptrend, guys, it's all good for the ones of you that need a strong Bitcoin. Okay, right, this is what is happening with the markets today, guys. Let's have a quick look at the economic calendar. Okay, so at midnight, we had the interest rate decision coming from Brazil, followed by a few announcements on the Kiwi dollar and the Aussie dollar, which, funny enough, all of them came out positive. We had the unemployment rate in Australia dropping from 7.5% to 6.8%, okay, versus an expectation of 7.7% from the analysts. Well, there you go, guys. The analysts can get it wrong sometimes. Then we had the Bank of Japan interest rate decision. They kept the interest rate negative. Okay, negative 0.10%. Right now, what's expected? In 34 minutes, we have an ECB press conference. So a bit of volatility is expected on the euro following a few announcements in the Eurozone at lunchtime. Yeah, after lunchtime at 1400 hours GMT plus 3, you can see how many announcements we will have. But by far the most interesting one is the interest rate decision on the pound and the Bank of England meeting minutes, yeah, the press conference that follows after the interest rate decision. They're going to give a hint to where the economy is heading to and what the central bank is looking to do to support the economy. Right, 3:30 in the afternoon, we're going to have building permits and housing starts in US. Very important announcements, followed by initial jobless claims, Philadelphia Fed Manufacturing Index, and Philly Fed employment for September. Okay, so the game is not over, is far from over, guys. A lot of volatility expected during the European session today and during the US session later on in the day. Right, at 1600 hours for the South African traders, we have the interest rate decision on the South African rand, which is expected to remain positive at 3.5%, unchanged. Okay, this is what is happening in the economic calendar. I told you guys this week is amazing for trading. A lot of reversals happened. A lot of assets got the boost that they needed, and we saw quite a few breakouts. Now, the answer to the question, okay, which is, what is the impact of zero interest rates on the economy? Okay, for the ones of you that know the answer, well done. For the ones of you that don't know the answer, again, this is the whole point of having these webcasts. You are learning on the go. If you like what you learn, remember to like, share, and subscribe everywhere you come across these webcasts. So the impact of a zero interest rate on the economy usually should be positive, yeah, because central banks decide to keep the interest rates close to zero to encourage people borrowing from banks and boosting the economy. Okay, when you have high interest rates, if you borrow money from the bank, then you're gonna have to pay it back with a high interest rate, and that's not is not helpful for most of us. However, though, if the interest rate is negative or close to zero, then there's literally no point in people keeping their savings in the banks, okay, as they're not getting anything from it. That's another reason why people started trading forex and trading online CFDs. Yeah, as the banks weren't giving them almost anything, or in some countries they had to actually pay. Yeah, like Switzerland and Japan. Yeah, if you have a negative interest rate, you end up paying to keep your funds in the bank. What's the point of that? Right. So this is the impact. Yeah, an interest rate close to zero will help boosting the economy, as people are encouraged to borrow money, expand businesses, yeah, and spend money. If you want a holiday that you dreamed of for the last 25 years and you worked hard for the last 25 years, but you still can't afford it, what you will do? You will most probably, like most of us, yeah, will take a small loan from the bank to take your girlfriend, fiance, wife, mistress around the world and solidify the relationship. So it kind of makes sense if you're just borrowing money and you're not paying any interest back, or the interest is very, very close to zero. It's like borrowing money from your friend. Yeah. This is the answer to the question. This is how governments and central banks around the world are trying to reboost the economy by lowering interest rates, yeah, and encouraging people to spend money. Right, this was it from my side today, guys. Join me at 4:30 to ring the bell together for the US opening. Until then, remember to trade responsibly and may all your trades be in the money.